Amur Lakshminarayanan, Managing Director and CEO of Tata Communications, joins us now. Lakshmi, good morning. Thank you for
Hi,
joining
good
us.
morning.
The last two quarters have been, in a sense, difficult for the entire industry per se. How do you've been calling out the fact that things will remain volatile, but progressively the data business will continue to grow. What is your prognosis of where you stand now?
Yeah. No, I think the first marker is in the last 2 quarters, our order book has expanded quite significantly, which is very encouraging for us. I have been saying that the decision-making time is much more prolonged, especially as we get into more of a larger deals and transformation in the entire digital infrastructure space. The time taken is longer. But I have been of the view that as you put more into the funnel, even though there is delays in decision, some things will come out when you improve the quality of the funnel and you improve the quality of engagement with customers. And that has borne out for us in the last 2 quarters. Our order booking has gone up over 25% compared to the same period last year. But on the revenue front, while we've had very good year-on-year data growth, that has come largely on the back of the acquisition that we did in the Interaction Fabric. But organically, our IoT Fabric, the Move platform, has delivered quite a good growth. And the third point is on the next generation connectivity, where in the last 2 quarters, the growth was somewhat muted. We are seeing the green shoots of that growth in this quarter. So I think these are the three big takeaways for this quarter.
Strong, and if the data business is growing sequentially, why is the data margin down by nearly 1%?
So there are a couple of factors here, Nikunj. One is as the digital portfolio grows, we've been calling out that the mix will have naturally an effect of pulling the net revenue margins down and the EBITDA margins down. But we do have the glide path for all of these, which is why we kept saying that, and we still insist that our aspiration to be at 23 to 25% is very doable, and that is what we are working towards. Particularly last quarter, we had a sort of a double whammy effect where our core connectivity saw some growth deceleration on the back of all the cable cuts that we had, and therefore reduced capacity to serve the customers. And secondly, we had higher expenses towards repairing these cables as well. So we had, on one hand, a reduction in revenue and higher cost in a portfolio that delivers a large part of our EBITDA margins today.
So since you're maintaining your FY27, the 4-point guidance, so I'm assuming that the trajectory for business in terms of order book will remain strong, and the trajectory of the margin, which is what you just alluded to, also will move higher. So 2 quarters out, 3 quarters out, things will normalize and everything will be up?
Yes, no, absolutely. I mean, that is what we're working towards, because the entire strategy and the rationale we have is that on the top line side, in each of the 4 fabrics, in the network fabric, in the cloud and security, interaction, and the IoT fabric, we have identified clear white spaces, and we have invested in developing our platforms and capabilities there. Those areas are fairly small today, right? So if you look at the network fabric, one of the elements of the network and the complications for enterprises is how do you connect to the cloud and exchange data between the clouds? And that area is becoming increasingly complex as customers move to multi-cloud and with hybrid cloud and multi-cloud options. And we have launched a platform that enables the customers to do that in the most cost-effective fashion, scalable fashion, as well as deliver the right performance on this platform. So that entire area today is only about 2-3 billion in market size, and it's slated to grow at about 20% until 2030, whereas the entire networking space, if you look, that is only growing at 2%, right? So we have identified those pockets within each of these areas which are growing faster, and we are investing in those. So similarly, in each of the areas, we are investing in those white spaces for us to grow. So that's where our confidence comes from. Secondly, the fact is, the whole digital fabric narrative that we are able to piece together a network, a cloud, and the cloud to the edge and the security, and similarly on the interaction and the IoT. The fabric story truly resonates with our customers, both in India and internationally. And our vision is to make sure that for the enterprises, we can deliver a fabric that is truly agile, very secure, and very simple to manage. So that's the vision. I think that resonates, and that is what gives us the confidence that we will be very relevant to enterprises in the future.
Talking about the digital business overall, can one safely say that you're going to stick by with that 17,000 crore rupee revenue target by FY27, which you had earlier guided?
Yes, it's actually 28,000 crores. So it is fairly ambitious. But we are sticking by that, and that is what we are working towards. See, ultimately, the most important things for us is how relevant are we for the enterprise? Do we have the right platforms and the product market fit? And we do see the white spaces as I just explained, and therefore we set our aspirations towards that. Now, there are macro conditions as we all go through, which is not very predictable, which might play into the delays as we have seen in terms of the acceleration of the revenues. But there is no reason why we should change our aspiration.
Also looking at monetizing any of the land parcels.
Yes, I think we did put out in this quarter the approval from the board for one of the major land parcels, and we are working through those. And the rest of the land parcels are also, we have a strategic program and sort of a timetable, even though the timetable is not entirely in our hands. As I've said in the past, it depends on the titles and other things. But we are systematically working through this. And this quarter, we announced that we have approval for one of the land parcels.
Monetized value, ballpark?
Sorry, I can't say the exact value. I think it is in the notes of the in the report. But the whole process that we are going through is a proper discovery of the value of these land parcels. This land parcel is Ambattur in Chennai. We've been working through to get the patta. We have our facilities. We have our partner STT's data center operating there, and they are the ones who are buying this to expand the data center capability. We're going to be launching our AI cloud, which is also being launched out of our Chennai data center. So there is a strategic rationale to how we are going through all of these, but this monetization will help in further investments, and also to see if we can reduce the debt levels from where we are today.
So Lakshmi, you are not an IT services company. You are not a telecom company. So one has to understand the basic yardsticks to understand which way the company is moving. I'm, let's say, asking this question on behalf of our viewers and your shareholders. What are the benchmarks they should use? Should they look at margins? Should they look at order book? Should they look at data growth? Should they look at debt? What are the yardsticks to look at?
No, I think we had set out the yardsticks, Nikunj, to say that we wanted to be in a double-digit growth, and we upped that aspiration based on the investments we are doing in the fabric. So clearly, growth is one of the yardsticks. And from a margin perspective, even though the EBITDA is not the final end goal, it's a lead indicator, and we said we wanted to be in the 23 to 25%. And ROCE clearly is a yardstick. Now, again, on the ROCE, we are working based on the trailing 12 months. And because of the acquisitions that we did, that you saw the dip, and that would go down before it starts coming back up again. And those are the three major yardsticks. Now, on the order book, I do give a color, and every quarter to the analysts, I give a color of where we are in terms of the speed, in terms of how we are engaging. It's difficult, unlike in IT services, to translate the order book directly to the revenue, which is why we've not been very precise about actually giving out a number, because some of the deals, we did a deal in Europe for a major transformation of network for a very large energy company there. And we did the deal almost 18 months ago. And only now that customer has become a $4 or $5 million customer. So it takes a long time for us to implement the network. And sometimes even customers, while they give us the order, they tell us that let's do region by region, right? So based on their contracts with their incumbents when it comes to an end and so on and so forth. So it does take time to translate some of these into revenues. But having said that, taking that as a caveat that some of these order books do take time to translate, order book is a good indicator. In our usage business, which is largely move and in the interaction, which is driven through usages, there is no order book is not a very good indicator. We only take what is committed business to us in the order book as opposed to the increasing usage that is potentially possible in the future. So there are some vagaries, which is why we have been a bit more cautious in giving out the order book data as it is to the market.
Fair point. So I'm going by the data what we have. EBITDA margins between 23 and 25%. Order book as of now, what you've reported is up 25%. This is high growth, Lakshmi, which is clearly there. 23-24% margins, order book growing at 25%. This is like great space to be in. So can I say that FY26 and beyond would be the big leap years for Tata Com, because that's the time margins would have stabilized, your acquisitions would have started kicking in, order book would become so large that you will enjoy benefits of operating leverage. So can I say 26, 27 are going to be like this leapfrog years for Tata Com?
Yeah, it would not be responsible of me to give a firm sort of a guidance in this respect, Nikunj, but
thinking right, directionally.
We are very confident. Yeah, directionally, absolutely. So we have to bear in mind in FY25 and towards the tail end of FY24, our growth rate looks very good. But again, as I said, it comes with the tailwind of the acquisition, even though the acquisition dragged our margins down. So what we are working towards in these acquisitions is, so going forward, the M&A revenues that we had will not be there. So we will be working off a much higher base compared to where we were in FY23. But if you take all of these into account, a good double-digit growth is something that we should expect. And our aspiration is not just a simple double-digit growth, but in excess of 15-16% is what we are aiming. But double-digit growth is something that we should definitely expect.
All right. Thank you so much for taking time out. Good chatting with you and getting an overall perspective on all that's going on with Tata Communications. So yes, order book has expanded and proceeds will be used to reduce debt and business expansion.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.